Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, April 25th, 2024. Let's take a look at the charts. So we have this long-term channel bottom that we closed below a couple, 2-3 months ago, 2.5 months ago or so, uh, and back. Then we gapped back above it. We closed below it 2 weeks ago. Now we're back above it. And so at some point, and I'm going to say it now, we drastically reduce its significance as a meaningful directional pivot point. I do think it has bearing on the near-term outlook, and I guess I could just jump to that, right now. Let me go ahead and change the settings here so I can actually see these graphs. 160.51. That's that double bottom that occurred until about a week and a half ago when we gapped below it. That is a session containment level to the downside, and above which we are expecting 178.63. This could be within just a few days given present volatility. Now, 156.83 is a downside 3/8 Fibonacci over the last few days, and it does line up well with 156.94 on the weekly chart, but it's just a session containment level. I just want to keep it light here. I don't want to make any strong long-term assumptions presently. What I will say that is holding above 160.51 will keep this channel top at 178.63 in reach. This could be over the next 2 to 3 days, or it could take all the way into later next week. If volatility contracts, it could be later next week. If it stays heightened the way it is now, this could be by Monday or even Friday. Friday's close, perhaps. I do think this trend line coming off, simple trend line coming off these highs, will have something to say about it. That is an intraday resistance level. But given the gap above and close above the 160.51 double bottom, that is a stabilizer. And in fact, if we close above 167.54, 178.63 is likely tomorrow. 178.63 is likely over the next 3 to 5 days anyway, above 160.51. 178.63, this simple channel structure, able to contain buying into possibly through May activity. We could fall away from here back to new lows. So I consider this to be a trend-defining element on the daily chart that we can follow now over the next few weeks. If we close above 178.63, then after all of this fuss around this channel structure, back and forth, if we close above 178.63, I see that as a 2 to 3 month or sooner rally to 229.87. So closing above 178.63, it's not going to happen today, but if over the next few days it does, I see no good reason to be short Tesla as we move through May trade the next 2 to 3 months, anticipating the 220s and dropping. And I think it's about as simple as that. And short-term traders, 3 to 5 day swing traders, day traders, 160.51 is a floor of support for the day, and above which 178.63 remains a 3 to 5 day target. On the way up today, once again, 176.54 offers intraday resistance. If we push, especially if we open today above 167.54, we could see 178.63 today, where if you're long right now following yesterday's settlement back above 160.51, you may consider taking profits. I'm talking 3 to 5 day swing traders. 3 to 5 week swing traders may consider going short here, anticipating new lows over the following 2 to 3, 3 to 5 weeks. Back to channel support perhaps, presently at 132.29. This number was not updated, by the way. I've got 133.26. That was actually Wednesday's level, but it's no fuss here. We're not going to see that level today. Here's your downside scenario. As I mentioned earlier, we have a downside 3/8 Fibonacci, and I like that because it does line up well in the weekly chart with 156.94. So you've got 156.83. If we break 156.83, 149.94 is likely. And I don't have it there on that chart, on an intraday basis. Breaking 156.83, 149.94 is likely intraday. And if we close today below 156.83, I think you can anticipate 138.35 again over the next 2 to 3, 3 to 5 days. 138.35 is this long-term trend line that held the early week low. We came very close to testing it. It is still a session containment level, but in terms of buying the market on a weekly basis, buying the market on a 2 to 3 week basis, I think that this is the 132.29 descending channel bottom. And I will go back to this chart here too. If we happen to test 178.63 today or over the next few days, that is the same channel bottom really, but configured different, slightly different at 132.29. So I think this is just simply another way of saying it is if you sell the upper 170s, you can anticipate the lower 130s and dropping as an objective. It's about as simple as that. This is a 2 to 3, 3 to 5 week play. Selling 178.63 and holding out for this channel bottom at 132.29, which will be a slightly different structure if we push on up to the 178.63 formation, if you catch my drift. Is there anything else that needs to be articulated? I will once again say, you may have exited a short position yesterday with the settlement Wednesday above 160.51, and you may have even gotten long. And if you're a 2 to 3 day, 3 to 5 day swing trader, you're long up to 178.63. I just don't see a convincing case to get long just yet on a longer term basis. That is to say, through May, unless we happen to close above 178.63. And then we have a green light for the 220s and dropping gradually. Inversely, if we close today below 156.83, I think we've got, a good high for the week. And we should fall back to 138.35 by the end of next week. The next couple of weeks, this descending channel bottom presently at 132.29. Now, in terms of the big picture, in terms of are we still expecting 101.81? The answer is no. I don't see, based on what just happened, with this move back above the mid 150s, with the daily settlement above 160.51, even if we close today or the week itself back below 160.51 or today below 156.83, even if we do all that, I'm no longer anticipating 101.81. I mean, it is certainly possible that we'll see it over the next few months, but I do think the real clear indication for whether or not we see 101.81 over the next month or two, that comes with a settlement in the coming weeks below the 132.29 descending channel bottom. Until then, I think this is our reliable play, if you will. This is what will offer the 2 to 3 week, 3 to 5 week signals. If we close below 132.29, 101.81 is likely within 3 to 5 weeks. And inversely, if we close above channel resistance at 178.63, 229.87 is likely inside of 2 to 3 months. I think I've said it all. I'm going to leave it at that for Thursday's Tesla report. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Friday's Tesla, and you have a great day.